Hey everyone, this is Mark from Stocks and Cash. It's February 19th, 2018. Here with your weekend market update video. I'm going to go over my holdings and then talk about some potential setups for tomorrow. So Friday left us with an indecision type candle. We kind of got out of our caution zone here, but then towards the end of the day we kind of sold off a little bit. Kind of closed around the same area as we did on Thursday. We're certainly not out of the woods yet in terms of having a recovery here and getting back to our all-time highs. As I said, this is kind of the caution zone that we want to be looking at. What I'd personally like to see is some sideways to slightly bearish action, the first few days of the week, kind of come back and retest these exponential moving averages, the 21 and the 8, as well as this 50% retracement line, and then be on our way back up bullishly. It would give the MACD a chance to kind of flatten out here. RSI would flatten, Stokes would flatten, and then we'd kind of move back on up. What I would be afraid to see is a continue. We've been up 6 days in a row here. I'd be afraid to see more, green candles on our way back up to all-time highs. You saw how the market reacted when we were just kind of parabolic, up, 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 up. Granted, we had some indecision candles on the way, we had some down days, but overall that trend just kept on going up without any real significant pullbacks. Like we saw here, we kind of dipped below the 8 and the 21, and then we kind of bounced, and we touched the 8 and we bounced, then we touched the 8, and then we just kind of rode straight up. So I'd like to see a little more consistency, I guess, in how we're going up, a little more methodical pace, kind of the ebbs and flows that you'd normally see in the market rather than just a straight up move like we did in January. So again, what I'm kind of looking for is some sideways movement and then continuing it on upward. I don't particularly think we're going to come all the way back down and test these, this low here, 253. I mean, it's certainly possible, but there's a lot of support rather now to hopefully prevent us from actually going all the way back down there. It would be possible to come back and test 100. I think that might be a healthy retest, so to speak, before we continue on up. So, be aware of that. We might flirt around in this warning area here before we ultimately move back up. A lot of stocks had this doji, gravestone-ish type candle on Friday. A lot of indecision. Again, it doesn't mean we can't move up higher, but at least from my perspective, what I would like to see, and it doesn't really matter what I like, but for the healthiest move, I think it would be some nice sideways movement and then on upward. But the trend short term is clearly bullish. Would certainly like to see that continue on. But again, hopefully some sideways movement before we continue upwards. Taking a look at the Qs. The Qs did break through on Thursday and then had this much more of an ugly gravestone type candle. You can see the MACD is almost crossed over here. RSI was down a bit. Stokes are still looking bullish. Volume was pretty, relatively strong. But I definitely think on the Qs we need a little bit of a rest. I think we're going to come back and test this 8 EMA, maybe the 21, which can't exactly see where it is because this zone is yellow. I'll have to pick a better color for it next time. But I do think we'll come back and test a little bit, in this area here. Maybe come back and test, the top of this warning area. So, again, I definitely see some sideways to slightly bearish action the first few days of this week. Hopefully we kind of reset a little bit and move on up higher. Holdings, Marriott I got out of for a loss, unfortunately. Again, we had earnings on Thursday, which I didn't look at prior to buying on Wednesday. Ugly, bear candle on Friday. I just took my medicine, took my loss, and got out of that trade. If we do get back out of this, warning area, certainly would take another look at Marriott long, but for now I'm out. Also got out of Hess. It was up for a little bit, and then like most of the other stocks kind of came down. MACD hasn't turned over. Just cut my losses there. A few other stocks I'm still holding. JPM, not pretty ugly candle as well. Probably should have gotten out of that one too. We'll see what happens tomorrow when the market opens, but MACD is almost crossed over, not quite yet. I definitely expect to see some pullback to the 8 EMA, so I'll probably hold on to it Put my stop at, below the 21, which is right here. Definitely not panicking or anything like that. So I think there's more opportunity in JP Morgan to go higher. A couple other holdings here. Target had a kind of a similar day to JP Morgan. Again, I think it'll probably come back and test the 8 EMA, maybe move sideways. I'm not too worried about it. And then Microsoft, pretty much the same thing. I think some sideways movement, maybe a retest here, but I don't see doom and gloom in any of these stocks in the short term. That assumes that the market doesn't roll over, but that's kind of my positions right now. So, taking a look at some potential plays on Tuesday. It's kind of a mixed bag for sure. I have some long plays, some short plays, and then some potential breakout plays if the breakouts occur. So let's take a look at Capital One. Capital One had a pretty strong bullish candle. Did have a little bit of a wick. We are still in our warning zone, but if the market cooperates and moves higher, I definitely think Capital One could continue on as well. It's looking strong. MACD is almost crossed over. Stokes and RSI are up. I would use some caution because we are in the caution zone. But if your trading plan allows for it, there's certainly some opportunity here in Capital One. You could put your stop at the low of Friday's candle, or perhaps below the 8 EMA, or even below this ascending trend line here, which we did violate earlier in the month. So something to look at there. Not crazy about it, but it is a potential setup, assuming that the markets are strong. Let's take a look at another potential bullish play, DGX. Very strong considering other stocks pulled back. This one did not. So if I draw my fibs, we are through the warning area. MACD has crossed over ever so slightly. RSI is looking strong. So I think DGX is a good 5-minute rule play on Monday. Nothing saying that we can't come back and retest our moving averages here, or retest this 61.8 retracement. But if it cooperates and moves on higher, DGX looks like a good strong stock to get into. Targets here would be 108, 78, 112, and 117. So a lot of good risk to reward on this particular stop. You have your stop, in this stock, and you have your stop at the low of Friday's candle, or just below the 21 or 8 EMA, maybe even the 55 if you want to have a little more risk and let this play breathe a little bit. Let's take a look at Walmart. Now it's not through its warning area here. Still has a little bit of more, little more ways to go before he gets out, but very strong candle. MACD is almost crossed over. RSI is strong. Volume was great. And RSI, you can clearly see a double bottom in the RSI. A little less obvious in the Stokes, and clearly in the stocks than itself. We had a bottom here, bounced. I do think Walmart is looking pretty strong. Again, if the market cooperates, I think this is a good potential play. Let me just pull the fib and back here. So again, we close kind of right on our warning area. So if we do get out of here, I think Walmart could have a nice run up. Targets of 110, 114, and about 119. It had a very strong run up since October. Had to pull back like everybody else. And I think there's an opportunity for it to run higher. Let's take a look at some potential breakouts, assuming that the markets go higher. And these are something you get into at the end of the day. LULU, I've been watching this for a while to see if it'll break through here. You see it's been consolidating quite a bit. If we break above 81.80, close above 81.80, I definitely see this one going higher. Price points of 86 and 91.97 as targets. So again, we want to get that close above 81.80. MACD has crossed over bullishly. Stokes are up. and RSI is kind of sideways but close to the over bought zone. But again, it can live there for quite a while, as we've seen. Volume wasn't so great, but I would expect on a breakout we would have pretty good volume like we saw on these days back last week. So just keeping an eye on LULU for a breakout. Another potential breakout, MasterCard, very strong the last few days. It kind of touched the 177.18 level that I've marked here based on the retracement. And if we do close above there, 182 and 190 approximately on MasterCard. Again, you want to make sure that we get a close above this 177.18 line. So the last 5 minutes or so, if we're looking strongly above that level, might be worth buying some MasterCard calls. MACD looks bullish. It's crossed, which is great. I think there's a lot of opportunity. It looks like a strong stock. It's been extremely strong. Had the pullback like everyone else, and trying to get on its way back up, making new all-time highs. So MasterCard looks pretty strong to me. But again, we want to have confirmation, have it close above the breakout level. Nike, similar to MasterCard and LULU. Again, we want to get a close above 68.8. MACD is kind of crossed over, but we want to see some stronger crossover action, and that's why we're waiting to get a close above this breakout level. If we do break out and close, targets of 70.61 and 72.96. Let's see. Did I look at Valero yet? Did not. So the reason I put Valero on here is because I just wanted to show you, the spinning top candle. This was seen kind of across a number of stocks. This looks like a, excuse me, a stock that has a good potential to kind of consolidate, move sideways. Whoops, let's wait an hour there. If we do close above the 93.35, the 61.8 retracement level, I think it has an opportunity to go higher. It's been very strong. It's had a nice pullback. It did have this big long wick like most of other stocks, but in general it was kind of an orderly pullback. And I think it has good potential to move sideways a little bit and continue on up if the market cooperates. So definitely some opportunity in Valero. This one's just more to keep an eye on. Your target would be 99.92, 104.56, and 110.55. Again, double bottom on the Stokes. I guess kind of say a double bottom on the RSI. That's kind of a stretch. Looks more like a V bounce to me. Or you could look at it as an inverse head and shoulders. I think we're getting a little too technical, honestly, making that kind of analysis on just a few days worth of movement on the RSI. But no, nevertheless, it had a bounce. But we certainly want MACD to cross over. That's a very bullish indicator when MACD is crossed over, especially when it comes back up and crosses above the zero line. Bullishly, like we saw back here, we had a nice run up. So that's kind of what we'd like to see on Valero. But I'd expect a little more sideways movement, and once we get above these two candles, looks like a favorable stock to get into, again, assuming that the market cooperates. Now let's take a look at a couple bearish potential plays here. CVX, Chevron. It's looking ugly. It's well below all of its moving averages. The Stokes are flat, RSI is flat to bearish, and MACD is looking pretty pathetic. Now, the only thing I'd be concerned with is that it might be oversold. It's only been low, MACD's only been lower than the current level once. That was back here in August of 16. Of 16. But if the bottom drops out on the market, this has a lot of potential to move down further. We'd probably see a big bearish candle with not much of a wick, probably something like this candle or this candle. And if we get below this, the bottom of this descending triangle, there's definitely a potential for this guy to keep on moving down. I have the targets drawn bullishly. I could draw them bearishly, but let's see if we get the move, and then we can redraw this. Another one is Facebook. We got rejected at the 55 and the 21 EMA, as you can see here on Thursday. Friday was an ugly bearish candle. Volume was about the same on both days. I definitely think if the markets roll over, this has a lot more potential to go down. I'm not saying, short Facebook for the next year or anything like that, but I'm just trying to follow the trend short term. We came down, had a bounce, got rejected pretty solidly here. We're now below this ascending trend line again, and we're below our moving averages. So Facebook's looking weak. I think it might have some more. It might come back and retest this 166.92 level. Just something to keep an eye on there. And lastly, McDonald's, also looking pretty ugly, well below its moving averages, following this 8 EMA trend line down. The only thing I'd watch for if you wanted to short this is that we don't like to stay too far away from the 8 EMA, so you might get some kind of sideways movement for the 8 EMA to catch up, or you might have an up candle, a bullish candle. But I do think McDonald's has more room to go down. Again, I haven't drawn the bearish targets yet. Let's see if we continue down. But certainly 153.95, 154 area would be the first target that we could hit. So 157, 154. So you're looking at about $4 or $5 or so for about a $2 risk. So kind of a 2-to-1 play here in terms of risk reward. But volume was very strong on that bearish move on Friday, and I think there could be more of it coming this week, especially if the markets don't hold up. So something to look out for on McDonald's. That's everything I have. Oh, sorry, Tesla, which similar Morningstar, or doji, I should say, not Morningstar, but another doji type candle on Friday for Tesla. We're back above this ascending trend line. We're above our exponential moving averages. MACD still wants to cross over. I just don't have a feel for Tesla. I'm not in it. Could we keep on going up? Certainly. It'd be nice if we rode this ascending trend line and get back to 360. If I were to play Tesla, I would definitely like to play it bullishly, get out of this zone that it's been in, get above 360, and play it up to the first targets at 378.49 and 401. So I'm definitely not getting in Tesla. I think we're range bound for now until the stock proves otherwise, and so we might just hang out in this 360 to 300 or so, 296 zone for a while. Again, until the stock proves otherwise. So not anything I'm getting into, but if you're already in it, I don't even know truthfully what to tell you. If you're confident in the stock, then keep on holding. But if we get below these levels, if you're in it long term, I mean, certainly I wouldn't worry unless we broke these levels, the 290 level. But if you're in it short term, for a bullish pop, I'd be a little concerned. Certainly not saying I was short either. Again, this stock to me is just not something I'm comfortable with. So that's where I'm at. If anyone has any questions or comments, love to hear from you in the comments section. Good luck trading and have a great night.